Hey guys, welcome to Winning Trades, where we bring you the very best trading strategies for boom and crash indices on the derivative trading platform. In today's video, I'll be sharing with you a very profitable strategy for catching spikes on the boom and crash indices using two EMA crosses, the 13 EMA and the 50 EMA. This strategy is strictly for the 1 minute time frame. I repeat that this strategy is strictly for the 1 minute time frame. If you are a scalper, then you need to take this video very seriously. No strategy in trading is 100% profitable, but 80% of the time, this strategy I'm going to be teaching you today will make you good money. In other words, out of 10 trades with this strategy, you may have at least 8 wins. The good news is that you can use this strategy for any of the boom and crash indices, guys. Whether you're trading boom 500, whether you're trading boom 300 or boom 1000, whether you're trading crash 500, crash 300, or even crash 1000, guys. And at the very end of this video, I'll be sharing the rules for this strategy that will keep you constantly in profit and bring your losses to the barest minimum. I will also be revealing an EMA that you can add to your chart in combination with the two EMA to allow you rake in even more profit. And most importantly, at the end of this video, I will show you how to set up all your EMAs to look just as sexy as mine. I tell you the truth, guys, the best things are always kept to the very end. So stick with me to the very end for a scoop of the bottom pot experience. Enough said, guys, let's cut to the chase. So guys, I'll be starting with boom 300. Let's see how this strategy works for boom 300, okay? So now we are looking for where the 13 EMA crosses the 50 EMA. The 13 EMA is the red EMA you're looking at, and then the 50 EMA is the blue EMA you're looking at, okay? Now that you have that understanding, let's go and look for where the 13 EMA crosses the 50 EMA upwards for a buy. All right, now we go back here. You can see this on this long spike here, the 13 EMA crossed above the 50 EMA. Okay, now at the point where the price returns back to the 13 EMA, we place our buy, which is at this point here. We place our buy and then we wait. Price came all the way to the 50 EMA and provided a support for price. Okay, and price would have taken another position at the 50 EMA here. Okay, now this thing would have spiked and then came back down and put us in good profit. We would have been in profit in both positions, the 50 EMA position and the 13 EMA position, which this is a very good trade. Would have taken good profit at this top here. Okay, at this point again, we would have put our position and taken a buy and still come down here close to 50 EMA and taking a position, and then this spike here would have put us in profit. Now that's one example. Let's look for a second example for boom 300. We go backwards, we look for where the 13 EMA crossed above the 50 EMA. All right, let's go backwards. Let's go backwards. Now this is a perfect example here. Look at this. This spike here caused this 13 EMA to cross above the 50 EMA. And what did you get? When the price came back to the 13 EMA, you place your buy and hold it. Look at all the profit you would have made, guys. Look at it. Look at it. Every time price came back to the 13 EMA, you place your buy. Look at profit. It came back to 13 EMA, you place your buy. Look at profit all the way up to this point. So guys, this stuff works. Now if you are taking your profit, you wait for another touch, the price comes back to this 13 EMA, you place your buy, it comes back, you know, you would have maybe would have gone out or you would have held, Now it comes back again to touch it, you place your buy. It comes down to the 50 EMA, you place another buy, and what do you get? Good profit, guys. So this strategy works. Now this is for Boom 300. I don't want to waste too much time, so I'll be going over to Boom 500. So let's look at if the strategy works for Boom 500. Now this is a strong sell in Boom 500 on the 1 minute. Now we're going to look for where price crosses above the 13 EMA crosses above the 50 EMA. Okay, so now look at this spike caused this 13 EMA to cross above 50 EMA. What do you get? You place your buy as soon as you notice that the price has come down to 13 EMA. What do you get here? Look at good profit, guys, all the way to this point. All right, now let's go backwards for another good example. We're going backwards. We're looking for where the 13 EMA crosses above the 50 EMA on Boom 500. Okay, now look at this. This is a good example. This spike here caused the 13 EMA to cross above the 50 EMA, and when price returned back to the 13 EMA, what do? You put your buy, and what do you get? Price puts you in profit, and in good profit at that. You close and you walk away. Now at this point, when the price came back to the 13 EMA, you would have put a buy, but price will continue to go down against you. At this 50 EMA, you would have put a buy again. Price goes down against you. At this point, what do? You don't continue to hold. You just count 10 candles. Once the price gets to 10 candles below the 50 EMA, you close and take your minimal loss or your small loss and go and wait for another cross. That's how the strategy works, guys. Now let's go back for another example. Okay, let's go back for another example. Let's look out for where the 13 EMA crosses above 50 EMA. Okay, let's look for a perfect example. Okay, look at this long spike here caused this 13 EMA to go above the 50 EMA. Now look at when price came back, what do? You put a buy order. What do you get? Look at good profit all the way up to this point. Good profit. When price came back again, you put your buy. It came back to hit the 50 EMA here. You put another buy. What do you get? You get good profit. All right. Now, so this is how the strategy works, guys. Now let's go over to Boom 1000. Now let's look for where the 13 EMA crosses above the 50 EMA. All right. So we are going backwards. We are looking for a perfect example where that happens. We go backwards. Now look at this. At this point, this spike here caused the 13 EMA to cross above the 50 EMA. What do you get? When price came back to the 13 EMA, you put your buy. What do you get? Price went on your favor. It came down again. You would have closed here. It came down again. You put your buy here. What do you get? It goes in your favor. Profit. All right. So you go backwards. Look for another opportunity. We're looking for another example, perfect example for this illustration. Let's go backwards. We look for where the 13 EMA crosses the 50 EMA upwards. Okay. Now look at this. This long spike caused the 13 EMA to cross above the 50 EMA. Okay. When price returns back to the 13 EMA, you put your buy. You're in profit. It spikes. You're in profit. You wait again. It comes back to the 13 EMA. You put your buy. It comes down to the 50 EMA. You put another buy. What do you get? It goes up in your favor and you're in good profit up there, guys. So this is how the strategy works. It works for the Boom 500, Boom 300, Boom 1000, as you can see it. Now let's go over to Crash, guys. Go to Crash 300. Now for Crash 300, guys, we are going to be looking for when the 13 EMA crosses the 50 EMA downward for a sell. Okay, we know that Crash, we're looking for spikes downwards. Okay, so now we are going backwards. Now look at this perfect example here. Look at this. This spike here caused the 13 EMA to go below the 50 EMA. And what do you get? When price comes back close to the 13 EMA, you put your sell there. What do you get? Look at this sell. You sold. If you had gone out here, you waited for it to come up a little bit, you sell again, or you just hold a position on top here, and you look at the thing kept going down in good profit. All right, so that's one example. Let's look for another one. Okay, now this is another example here. at this point, what do you get? The 13 EMA crossed below the 50 EMA. As soon as price came back to touch this 13 EMA, you would have put your sell. Okay, look at the sell. It would have kept going down in profit. Look at all this profit. Okay, let's look for one more example. All right, look for one good example again. Now look at this perfect example here. Look at this 13 EMA crossed below the 50 EMA, and when price came back, what do you get? Price came back here, you put your sell. It must not always touch the 13 EMA. Once it gets close to it, you put your sell. Then what do you get? Sell, profit, guys. Profit all the way. That's for Crash 300, guys. You see that this strategy works. This strategy is on fire, guys. This is a killing strategy. You don't need to stress yourself. Once you just see the signs, you go in. All right, guys. So now let's look at Crash 500. Crash 500. Look for Crash 500. Remember, we're looking for sells. So we're looking for where the 13 EMA crosses the 50 EMA downwards. We'll look for a perfect example. Now look at Crash 500. At this point, what do you see? This spike caused this 13 EMA to cross below the 50 EMA. What do you get? Once the price came back close to this 13 EMA, you take your sell. Look at, and you hold it. Look at the profit that you would have gotten. Even if you are closed here, when it came back again, you would have taken it downwards. Every time, look at this. Every time price goes close to 13 EMA, what do you get? You get a spike downwards. You get a spike downwards. What do you get? Spike downwards. So look at profit everywhere, guys. Then at this point, you would have taken, when price came back to the 13 EMA, you would have taken a sell and then held it. When it got back again to 50 EMA, you would have taken a sell. And what do you get? Everything still came back in profit, guys. This is good money. This is good strategy, guys. Now let's go back for another example. Let's go back. Now look at this again. Perfect example, guys, for Crash 500 here. At this spike here caused this 13 EMA to cross below the 50 EMA. What do you get? When price comes back to 13 EMA, you take your sell confidently, guys. What do you get? Good profit. You close here, you wait again for price to get back to 13 EMA. What do you get? You place your sell again, good profit. Guys, this strategy works. At this point here now, price would have come back to 13 EMA, you would have taken a sell. It would have come back to the 50 EMA, you would have taken a sell. But you see that price kept going upwards. What do? You just, after the 50 EMA, you count 10 candles upwards. 1, 2, 3, 4, 5, 7. Once it gets to 10, you close the 2 trades in loss, man, in small loss. Okay, that's how this strategy works. Don't hold it, just close and look for another opportunity. So let's go to Crash 1000, guys, so we don't waste too much time. This Crash 1000, we are looking for where the 13 EMA crosses below the 50 EMA. Okay, so we're looking for it. Let's go backwards. Let's look for a perfect example. Okay, now even if it's this one here, this spike here caused the 13 EMA to cross the 50 EMA. At this point where the price came back to touch the 13 EMA, you would have taken your sell and you would have been in profit. Okay, guys. Now let's go backwards for a perfect example. Now look at this perfect example. At this point, this spike here caused the 13 EMA to cross below the 50 EMA. When price came back to touch the 13 EMA, what do? You take your sell and you would have been in profit. Look at this massive profit. Let's go back for one more example. Now look at this. This spike here caused the 13 EMA to cross below the 50 EMA. As soon as you see that price is coming back to touch the 13 EMA, you take your sell and you'll be in good profit. Now at this point, you would have taken a sell on the touch of the 13 EMA. You would have been in loss. You come back to 50 EMA, you take another sell. Then you count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Okay, this would have been a loss trade because just at the 10, it took like 12 candles before you now had a spike downward. Okay, which would have put your 2 positions in profit. But for safety, you just close and take your minimal loss and wait for another entry. So you see that these things works, guys. If you keep going backwards, you see that on the cross you always get a sell. Look at it, crossed, you had a sell. Look at this long sell. It always works. So this strategy I'm teaching you guys, it's an excellent strategy, very profitable strategy. It works all the time. You just have to take care and watch out for the rules and follow it strictly. Now, like I said at the beginning of this video, I'm going to share the bottom pot experience for those that have waited to this very moment. Okay, so what are the rules for this strategy? Number one, the rule is that you must determine the current market trend. Is boom buying and is crash selling? You must understand whether the boom market is buying or is selling, okay, before you can begin to implement this strategy. So if boom 500, boom 300, boom 1000 is buying, then that is the perfect time to buy using this strategy. If crash 500, crash 300, or crash 1000 is selling, then that is the perfect time to focus on using this strategy. Okay, that's strategy rule number one. Rule number two, make sure that the 13 EMA crosses above the 50 EMA for boom. And if you are selling crash, make sure that the 13 EMA crosses below the 50 EMA for a sell. The third rule, take only 2 positions, guys. Take only 2 positions. The third rule, take only 2 positions. First position, close to the 13 EMA or on the touch of the 13 EMA, and then place your second position close to or at the touch of the 50 EMA. That's the third rule. The fourth rule is that your stop loss for both the 13 EMA position and the 50 EMA position should be 7 to 10 candlesticks above or below the 50 EMA, depending on whether you are trading the boom or the crash indices. Your stop loss is 10 candles. Once it gets to 11 candle, you need to close the trade or you bear the risk. Okay. Now, the fifth rule is that as soon as the trade goes in your favor, make sure to move your stop loss to break even. When I mean move to break even, in other words, just a little pips above your entry position. Okay, that is for the moving your stop loss to break even. Now, the sixth rule is that you must be disciplined enough to take your minimal loss or the small loss on the 11th candle above or below the 50 EMA. Now, the seventh and most important rule, remember that this strategy is strictly for the 1 minute time frame. Don't go and be using strategy for another time frame. Okay, it's strictly for the 1 minute time frame, guys. That is the rule. You must follow it for this strategy to be successful for you. Now, at the beginning of this video, I promised you I was going to show you an EMA that you're going to add to the 13 and the 50 EMA to make you go home with even more profit. That EMA is the 200 EMA. Okay, that is the 200 EMA that I've added here. It is now the yellow EMA here. Now, when adding the 200 EMA to these other 2 EMAs make you get even more profit, because at the point where the 50 EMA crosses the 200 EMA, it means if 50 EMA crosses the 200 EMA on a boom indices, then it shows us that there's going to be a long buy. Okay, and then at the point where if it's on crash, when the 50 EMA crosses the 200 EMA, it shows that we're going to be in a long sell. Now let's look for a perfect cross of the 50 EMA downwards on this crash 1000. Okay, now let's go backwards. Okay, because I think the crash 1000 is currently buying. Now let's look for where the 50 EMA crosses below the 200 EMA downwards. Okay, we're looking for that opportunity right now. There are crosses, but it's not giving us the perfect example that I want to show to you. Now look at this. Okay, now look at this. Look at this 50 EMA here. 50 EMA here has crossed below the 200 EMA. Okay, the blue has crossed below the 200, and you can also see that the red, which is the 13 EMA, has also crossed below the 50 EMA. Now this cross happened almost at the same time. It happened almost at the same time as the 13 is crossing over the 50. The 50 is crossing over the 200 EMA. That is what we call the golden cross, guys, or you can call it the jackpot cross. That is, you're going home with a big bag, okay, when you see this kind of thing. So at that point, you just wait for price to go back to your 13 EMA, and then you put your buy and put your sell and forget about it. What happens? Look at all the sell goes all the way. Look at this, all the way to this point. Okay, good sell all the way to this point, and that's good money. That's when you know you should hold your profit. Just hold and then be good profit. Now if you go to Boom 500, let's look for where that kind of cross happens, where the three crosses. Okay, let's look for it. You will see it. Okay, where the three crosses happen. No, this is not a perfect example. Let's go back. Let's look for where it happens. Okay, let's go back. All right, look at this. Have you seen this? At this point, what do you see? You see that the 13 EMA crosses above, and then the 50 EMA also crosses above the 200 EMA. So what do you get? Look at the long buy. Look at the long buy. Have you seen that, guys? This is a perfect example, guys. So this is the jackpot cross, guys, or the golden cross, if you want to call it that way. When the 50 EMA crosses over the 200 EMA, depending on the indices that you're on, whether it's on the boom or on the crash, guys, that is the time for you to hold your trade for even more profits. All right, now without wasting much time, I'm going to show you how to set up your EMAs like I promised. Don't forget, the best is reserved for the bottom pot, guys. So now this is very important, how to set up your EMAs. All right, so basically what you do, these are my setups. This is the 13 EMA, this is the 50 EMA. Look at the 50 EMA. You see, period is 50, the shift is 0, method is exponential, apply to close, the style is 2 pixel, blue color. Okay, now you go back, come to this one, look at my EMA 13. You can see is period is 13, shift is 0, method is exponential, apply to close, style is 2 pixel and red color. All right, go to moving average for a 200. Look at the 200, shift is 0, method exponential, apply to close. Okay, 2 pixel, color is yellow. All right, so that's how to set up your EMAs, guys. So as you can see, this strategy is a very successful strategy, guys. Now, like I would always say, try this strategy out on your demo account first. Trade it for 1 week, for 2 weeks, and then see that it actually works for you. Okay, then you can now go on your live account to bag the money, guys. This is a strategy that bags you money, and you don't lack opportunities. Whether it's on boom, crash, you have like 6 indices to just check for the crosses, guys. There is no how you won't make money with this strategy. All right, so if you found this video helpful, guys, please click on the like button, subscribe to the channel, and turn on the notification bell so you don't miss out of our content. Also, leave your thoughts and questions in the comment section below this video. Thank you so much for watching, guys. See you in my next video. Cheers.